Hello, Oracles. Today we're going to be going over stock gap analysis for Palantir stock PLTR and the Nasdaq, the QQQ. So we're going to take a look back, just like we did last week, at the last 2 years and any gaps that were created over that time. Now, for those of you who are new, gaps are when a stock is going to be opening higher or lower than it closed the day before, thereby creating a gap. So, for instance, if a stock closes at $100 one day and the next day it opens at 105, there is a gap between $100 and $105. Now, gaps do fill 9 out of 10 times. More often than not, they do fill the next day, but there are some gaps that do go on for a long time. For instance, we saw Tesla stock itself fill gaps that were 2 years old during that 2022 bear market. And Tesla wasn't the only one. The entire tech sector ended up pulling down significantly, thereby filling any gaps that were created along the way over those last 2 years as well. So right now, we're in a big bull run, seeing these gaps getting created. So it's just good to have on your radar, not to say that these things are going to come to fruition. Again, historically, they do fill 9 out of 10 times, but it's just something to pay attention to. Not to put fear in anybody not being bearish, but it's important to understand the downside risks when it comes to stock analysis as well. Long-term shareholders of companies may not even need to worry about these because they're in it for the long term. They're not doing short-term swing trading. They're not going to be looking at a stock and saying, hey, I want to sell and buy more lower. That is totally up to you, whatever your investing thesis is. As a long-term investor, not that important. However, if you do think that maybe the stock market's a little overvalued right now, and you do want to buy more, but you're kind of like saying, when can I buy more? When are we going to get a pullback? What could it pull back to? Gaps could give us an indication as to those levels. Now, again, when we look back at Tesla stock itself, when it pulled back to fill those gaps, those were all strong resistance levels at some points, and they ended up stopping at those levels. There was a time when Tesla was pulling down, and it literally stopped at every single gap along the way as we came down. So just one of those things to pay attention to when it comes to actual stock chart analysis. And I know a lot of people don't believe in that kind of thing, but if you look at the charts and based upon the fact that a lot of computers trade based off of algorithms, the stock chart analysis and all the charts that we see are following algorithms. And that is what all of these computers are trading off of. So when it comes to those short-term movements, it's important to understand how they go. And it's also going to help you keep your emotions in check when you see stocks maybe pulling down to fill these gaps and you're wondering, well, why is it pulling down? Well, typically it's because there's a reason in the market that is pulling everything down for whatever reason it is. And then when you're seeing the market pulling down, you can say, all right, well, what levels could I expect us to get to? And gaps are one of those things that you could pay attention to when it comes to what levels we could be coming down to on that pull down. So again, this is not to be bearish or anything. This is just to kind of give you guys some education because gaps do go on the way up as well. And we saw a lot of the gaps on the way up that Tesla filled, pushing itself back up again as it was on this last run. So gaps go in both directions, so it's good to understand how they both work. And fortunately for us right now, because the stock market's been on such a bull run, all the gaps that we have are below us. And again, we'll get into those right now for Palantir and the QQQ. All right, so to start off with Palantir, closing today at 64.65. Unbelievable day today. And it hit a peak of the day at 67.88. So amazing run that Palantir has been on. But again, when you look at actual fundamental valuation of the company, it's baking in a lot of future growth into this. So either we're going to stop at these levels and trade sideways for a few years until the earnings are going to catch up, or the stock price itself is going to pull down to get itself back in line with where earnings are. So it's one of those two things are going to happen over the next couple of years. And again, this stock gap analysis is just one of those things that if we pull down, we might hit some of these levels. So looking here, we have a tiny little gap at 58.48 that was created on November 11th. We have a tiny little gap at 51.58 down here that was created after that election. Then we have another big gap down to 42.04. That's from November 4th. You come back here to September 6th, and you've got a gap down to $31. Coming back to August 5th, and don't forget, August 5th was the day that we saw the market pull back significantly. That has the gap there at 24.42. Going back to May 29th, you have this little gap here at 20.99. February 5th of this year, we have a gap that goes down to 17.87. November 1st of last year, so just a little bit over a year ago, we have this gap down to 14.96. And then if you go back to May 8th of 2023, you have this gap that goes down to 7.75. Now again, this is 2 years old. Gaps do fill 9 out of 10 times. There's plenty of gaps here. And again, if those odds are anywhere near true, 9 out of 10 gaps getting filled, that's a lot of gaps that we just saw. So historically speaking, chances are a lot of those are going to get filled. So again, I don't know if we come down to this level here at 775, but when I start looking at what could potentially be happening in the macro environment, us getting into a recession, the entire stock market pulling down, maybe even more severely than it did in 2022, all of these gaps here are on the radar for potentially getting filled. And even if I'm going to say, hey, maybe just 1 year old gaps are going to get filled, that means that we still pull down to this $15 level here. Now, again, nothing's guaranteed. I don't know if it's going to happen. And I know it seems wild. And everybody who's super excited about Palantir is like, there's no way it's going to come back down. Well, guess what? I was one of those people when it comes to Tesla who said, Tesla's never going to get under $1,000. Tesla's never going to get under $900. Sure as heck, it got way down further than that. It got down to $300. So, yeah, anything is possible. And this is why I always keep these things on my radar. And I just pay attention to what's going on in the macro environment, pay attention to what's going on with the company, because the company may be doing perfectly fine, but the macro environment could cause the massive market pullback. And therefore, the companies like Palantir will pull down with it. And so I'm not saying go out there and take profits in Palantir. You need to do your own due diligence and research for your own portfolio to decide what you are going to do here. I'm not selling any of mine. I'm holding on to it as it is. I will be paying attention to some of these pullbacks if we get them to be adding at different levels as we go along. It is a stock that I do plan on holding for very long term, but it's one of those things where I'm still cautious about adding because as it's going up, it's not leaving any room in my portfolio for me to add to it because it is going up so high so fast. So I love Palantir. It's awesome. And again, not trying to be bearish about it, but just pay attention and do your own due diligence because I know it's super exciting, but I also know how painful it can be if you think that the only place we can go is up and then all of a sudden that rug gets pulled out from underneath us and you start wondering what's going on and you lose your conviction. What is going on? Why is the stock selling off? Just understand it's possible. And if you are a long term investor, you can utilize those as potential buying opportunities. All right, so now we're going to look at the NASDAQ. And just like the S&P 500, the gaps are a bit smaller just because the way this broadly spreads out, but gaps in indexes can also get filled. So looking here, going back to the election itself, we have this gap going down to 492.88. Currently, today we closed at 506.59. Now, if you look back just this couple of weeks here, you can see we did create a gap on the way down, and we have now filled that gap coming back up. So this gap that was created has now been filled. So now we ask ourselves, are we going to continue what we normally do during Thanksgiving week and continue bullish and go up from here? Or now that this gap is filled, are we going to come back down and test this gap below us? Nobody knows for sure. We just have to pay attention and see what happens. And so then if we pull back here a bit further, you can go back to January of this year and we have a gap down to 412.37. You go back to a little bit earlier in that January, we have a gap down to 406.40. Go back to November of last year, about a year ago, we have a gap down to 376.23. And then we have this gap down here to 355.59 from October 31st of last year. And then we go back to May 24th, the last gap, and that's going to come down to 330.17. So yes, looking at where the NASDAQ is right now, pulling down to this 330 level is about a 35% drop. Now, 35% isn't unheard of. We pulled down just over 33% in 2022. So this is entirely possible for us to come down and fill this gap at 330, pulling down about 35%. So again, these are the reasons why I keep these things on our radar because it has been done before. It will happen again. So I'm just paying attention to where we're at here, what these levels are, and what the gaps are, because if these are the levels we're going to pull down to, this is potentially a reason why Warren Buffett just keeps on building up his stockpile of cash because the market is a bit frothy right now. I don't care who you are, I don't care who you talk to. There's a lot of froth in the market, and we're starting to bake in a lot of future earnings into this market. So we're either going to be trading sideways, like Morgan Stanley says, and we're going to be getting another lost decade like we did after the dot-com bubble, or we are going to be getting a big pullback and correction so that we can move back up again stronger. Either way, it's important to be agile. And this is why my portfolio has been consolidating lately. I sold off today FLIN and I sold off VYMI, consolidating into these other plays for high income. So I'm looking at this high income, and yes, it's ultra income when it comes to yield max, definitely has NAV erosion, but I want that income coming in to take advantage of these opportunities. But I'm not dripping that money in. So if I lose that NAV, it doesn't really matter because all that money is going into other plays as it is, just as a way to bring in that cash. I'm limiting myself to 5% in those plays, and so I can take advantage of any opportunities next year or whenever we get this pullback, or even if we trade sideways. Trading sideways is actually going to be better for those ultra yield plays because they won't erode as much. But that's just how I'm looking at it. And of course, I need to be agile with my own portfolio and make adjustments as need be. I'm also consolidating a bunch of other areas because why would I put money into my 25th play when I could be putting money into my 10th favorite one, which is going to be a better performer? So I'm slowly weeding out a bunch of those different ones, consolidating down into that, thereby saving myself even more cash because the way my portfolio is set up is I'm giving myself an opportunity at every step that I go to add a bigger cash pile at the bottom of this. So I get my bigger cash pile and then I start to distribute the funds elsewhere. So right now I'm finishing up level 2, step 2. For you guys who don't know what that means, check out my end of the month videos where I go over my entire portfolio and break down my entire strategy. But it's just levels that I set for myself in my portfolio to grow it over time to be able to take advantage of this growth in the stock market, but also set myself up for some downside risk mitigation by having stockpiles of cash and this cash flow coming in from all of these dividends. It's a long-term play that I'm doing with my entire portfolio that's going to help me bring in a bunch of cash flow and give myself cash stockpiles at the bottom while still taking advantage of any growth that's coming in. So it's very well balanced for that opportunity. And if we don't pull back, I am still growing with the market. If we do pull back, I have plenty of cash and cash flow to take advantage of the opportunities. So that's why I'm doing all of that in my portfolio, consolidating there. I do have a few more plays that I am going to be selling out of over the next couple of weeks. My goal by the end of this year is to get myself through step 3 of level 2, because that will get me ready to start next year stronger than I was before, and I'll continue to look at consolidating from here. I was going to wait to consolidate my portfolio, but decided that while the market is going up, why not take some profits? I can take some profits off of the table right now. I already took some big losses earlier this year with Tesla, so because of all those losses, I can afford to take some of those gains, and it's going to offset all of that. So at the end of the year, I'm still going to come in profitable, but I'm also going to have a much stronger foundation for my portfolio, and I'll take those profits now. So this way I can set myself up better for next year. So that's where I'm at right now with my portfolio. That's what I see for the gaps in Palantir and the QQQ. Next week, I'll be going over the gaps for SoFi and the Russell 2000. So small caps have been on a massive run lately as well, so it'll be important to take a look at those gaps there. So that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.